The recent market correction is not good news. Now we have followed up with some kind of a front-running issue with few fund managers in Axis Mutual Fund. I've covered it up extensively in my earlier videos. Please do watch. I recently met a friend of mine. He said, Anand, are we already in bear market? Can the market correct 30-40% like it did a couple of years back? Are we in recession? I did answer those questions that was on his mind. I thought I will also do the same in this video. But before we get on to those questions, I thought let me first tell you the reasons behind the market correction, especially in the last few quarters. Everyone today knows that the inflation is the primary cause of worry, and that is making the market correct. The global rate hikes is not good news for a lot of liquidity. Supply chain constraint, especially due to China's zero COVID policy, and of course, overvaluation. Every other asset class, especially risky assets like equity, was extremely overvalued. These are the four reasons why the market has been correcting, and I think will correct going forward. While we are all worried about global markets and especially US, I think we should first look inwards. Let us try and answer those three questions that my friend had or you may have through India's lenses, right? First question is, are we in recession? Recession? Definitely not. Slow growth? Definitely yes. While we have all been reading great reports about India's GDP growth touching 8.5 or 8.75%, if you read the recent GDP growth estimates, they've definitely come off, maybe 1% or by 1.5%. As we speak, FICCI has already reduced our growth rates to 7.4%. S&P has reduced it to 7.3%, while IMF still believes that India's GDP growth can be 8.4%. So recession is definitely not going to be there. Slow growth is a definite possibility. So you can be pretty much relaxed on the question about recession. While the growth rate of 8% is ruled out, slow growth is definitely going to be there. And the good news is India should continue to be the highest growing nation across the world. This is great news, especially once stability across the globe comes in. There will be a lot of liquidity that will get into Indian markets. Let me now answer the second question that can be on your mind. Can the market correct by 30-40%? Everyone tries and goes back to 2008 or 2020 when the pandemic hit. This is definitely not 2020 because when the pandemic hit, if you remember, we didn't know what is going to happen. Right now, we all know the reasons because of which the correction is happening, but I don't think the businesses are going to shut down. The businesses can slow down, businesses can reduce their profits, businesses may show some slow revenue growth. Yes, that is a possibility, and that's the reason why market has already corrected. But if I were to think that the markets can correct by 30-40%, I really need a bigger reason than this to fall, because any level below this is a value zone for India. We have been given a valuation PE of about 20, 21, 22, 23 in the past. Right now, we are already at a healthy 21 or 22 basis of forward earnings. And if the market falls from here, actually we will be in the value zone. Therefore, I believe 30-40% correction is definitely ruled out. Can it correct from here? Yes. How much? Maybe 5%, 10%. Some stocks can definitely fall. If that stock is going up for no reason or some great expectation, of course that can fall. But Indian markets in general may not really fall by 30-40%. At best, maybe 5-10% from here on. Don't get me wrong, this is not a prediction. I'm just trying to say logically, from any correction from here on would mean that we are getting into a good value zone. Are we in bear market? Absolutely not. For us to be in bear market, the markets have to correct significantly. There has to be no sign of growth. There has to be extreme negativity. Even if you talk to businesses today, they continue to believe that the GDP will be back on track. The recent government measures are great news for us, especially when it comes to inflation curtailing. I think government will do a lot of things other than just believing in policy rate cuts to curb the inflation, and I really hope the situation in Eastern Europe changes very fast. I for sure know that supply chain constraint, especially from China, is going to be a problem for a long period. But I somehow believe that the inflation due to the war in Eastern Europe can actually subside very quickly tomorrow if those guys come to an agreement, and that can push the market by over 5, 10, 15% in a very quick time. Therefore, you don't have to worry about bear market. We are not in a bear market. So now you may think, okay, this information is fine. So what should I do about my portfolio? Should I buy, hold, or redeem? I made a very long video on these three things. You should definitely look into that video. For now, I think you should cut out the noise. Don't listen too much to the media. You will see negative news every other day. Just like the way you were seeing positive news some time back, today is a time to sell negative news. Don't fall for it. Just continue to maintain the discipline of investing at all times, and this should pay you off well in the longer run. Of course, if you want the money in the next couple of years or maybe 18 months or 12 months, please do not touch equity, because equity inherently are risky, and during these times, for all you know, you may end up losing very fast than gaining. Be very sane. Don't rush into the market, but don't rush out of the market too. Hope you found this video useful. Please do share your feedback. Till then, happy investing.